What is up, guys? Toss here. Welcome back to another video. And yes, I'm wearing a hat in my house. I don't even know what the heck this type of hat is. It has a little puff on the top, but am I the only one that likes to wear hats inside? It keeps my head nice and cozy. But anyway, today we're going to be talking about a bunch of stocks. I couldn't narrow down a number like 5, 6, 7 stocks. It's a bunch of stocks here that I'm personally looking at as the market is selling off. And again, today it is selling off. You guys can see the S&P's down almost 2%. So I want to talk about a bunch of stocks that as the market drops, I want to buy. And many of these I already have a position in, so I want to add more to the position. And this is pretty much my shopping list. I mean, they haven't dropped a ton, these stocks. I mean, they haven't dropped 10, 20, 30%. I mean, if they do, I'm definitely going to be buying. But the important thing is to have a shopping list even before the market starts to drop, and especially as the market starts to go down. You must know what you want to buy, right? So hit the like button, subscribe, make sure to get 2 stocks from WeBull and $30 from M1 Finance. Check out the Patreon. All of those are linked down below. And let's just talk. And before we even get into the list, let's go over what the markets are doing. We kind of saw a fake out yesterday. And by fake out, I mean we saw a rally which probably suckered in a lot of buyers. And this is kind of called a bull trap, right? We saw a big pop, sucked in a bunch of buyers, and then it ended up being a fake out because we didn't continue the rally. We didn't take out 39.30, which was a big level that I was talking about. That was a resistance from back on the 18th, 19th of February. We didn't break out of that. We turned down and we dropped well above the percentage that we gained yesterday. I mean, take a look. Yesterday we opened up at 38.61. We went up to 39.30. That was a nice pop of 1.5% roughly. And now we actually took out the closing, or rather the opening price from yesterday, which is not a good sign. Now we're trading at 38.47 on the S&P. And if we zoom in a bit here on the 5-day, 5-minute, we were fiddling with those lows from 2 days ago at about 3800, 3805, 3820. We actually held 38, 20, 30 here, and we're actually running back up right now, but we're not out of the woods yet. So I think if the lows from 2 days ago break, which could very well happen based on the trend right here, the S&P 500, it could be going mid 3700s, the high 3700s. That's where I think it could be going next. So as we're seeing this drop, and of course tech is leading the drop, we're seeing many stocks drop more than what the markets are going down, and a lot of those are the higher, more speculative growth stocks. And you know what stocks go down less than what the markets go down? More the value-oriented, the boring, the quote-unquote safer stocks. So a lot of stocks are going all over the place, and for me, I'm focusing on a lot of the more established companies that still have growth. They pay dividends, a couple of them, and I believe these are companies that, when I look 10 years out, I'm looking 5, 10 years out, there is no way these companies are not bigger companies. There's no way they're not impacting more lives out there through their business and services. There's just no way in my eyes. And the first stock here you guys can see, and the watch list is right here, and all of them are red. We might as well start from the most red. It's NIO, N-I-O. This is one that I'm watching. It's down 7% today, and I've had a position in NIO for a while. The long-time OG viewers of the channel, you guys know that. I've been buying NIO since the $3, $6, $5, $7, all in that lower single-digit level. And for me to buy more here for my long-term position, it takes some guts because, again, it's gone up so much from that initial price point. So if we were to crash in the market, see a big correction, and we got down to $20 on NIO, that is where I'd consider adding into my position from the single digits. I'm willing to average up at that point, even if we got down maybe to 25, maybe 30, and I don't see that happening unless we get an overall drop in the market of at least 15, 20%. If we get a bear market here in 2021, I will probably be adding NEO. That is for sure. Another one here is Shopify. I really like Shopify, and I, as well as many of you guys out there, probably would agree. We were thinking that this was a bit overbought at 1,500. It went up from 1,000 to 1,500 in pretty much a straight line, no pullbacks, and now we're finally getting the pullback. And this is a great example of a stock that's a high-growth stock that's dropping more than what the market goes down. Example, S&P dropped 3%, 4-5%. Past couple of days, and Shopify's down in that same time period about 17%. So it's almost in a bear market. So you guys can see how different stocks fluctuate different, with different volatility throughout the downturns. Shopify is one of those. It's down 4.5% today, and I'd be a buyer of Shopify. I would love to get it in the 800s, 900s. I mean, that would be ideal, but we're sitting at 1250 now, so that might be a stretch unless the market's dropped and we got somehow under 1,000 with another big drop in the market. That could happen over the next couple of weeks. Who knows? If that were to happen and we got blessed with somehow $800, $900, that is where I would be buying into Shopify for sure. Same with Square. I mean, Shopify and Square they're kind of, obviously they're not the same type of business by any stretch of the imagination, but in terms of how much they've rallied in the past couple of months, they've both done very well, and they're both a bit frothy, the valuation. I'd like to see both of them come down, and it's the same thing with Square. If Square were to get down to the mid to lower hundreds, I mean, I know that's a stretch, but I'm just saying here, throwing numbers out for a better valuation, the price of sales would be a lot better down there, and that's what I use to value a lot of these higher growth companies, right? I look at price of sales for one of the metrics, and I'd like to see it 150, maybe 140, who knows, maybe 175 I'd start buying in a long-term position. It really depends. We'll see. But Square's one that I really want to get into and build up in the next downturn. MasterCard, I'm already in this one. I've been in this one for a while, and I love this company. It's Visa's competitor. They go head-to-head, but both of them belong in the market, and they both do very well. And MasterCard is just a bit of a faster-growing company. Visa is for sure more stable. The dividend's probably better on that one as well. If you're more of a dividend investor, you want a more stable company, I'd say Visa is great. But on the flip side, MasterCard, it's not like it's unstable. It's for sure stable, in my opinion. The dividend's great too, but it's just a little bit more fast-growing. It's growing revenues quicker. Maybe the stock's a bit more volatile. Who knows? We have to look at the metrics for that. But either way, MasterCard is one that I really like. I would love to add more under 300, and I'm sure we would get there if we did see a little downturn, a further downturn here in the market. Apple and Google, I mean, these are no-brainers. These are staples. You could even throw Amazon in that bunch, but I realized, and I'm sure a lot of you guys realize this as well, we are, and I'm not going to say we, I'll speak for myself. I was a bit too heavy invested in the big tech names. I actually just sold out Facebook a couple weeks ago. I invested into Raytheon. If you guys caught that move with me, although I don't like when you simply buy because I buy, but if you did your own research and bought Raytheon when we talked about that, you'd be up a good amount. Raytheon actually went to 78, and I was buying it in the 70s, and now it's actually down about 3.7% today. Raytheon could be a dip today as well, a nice dip buy. And I wanted to get into Raytheon because I was overly invested in the FANG stocks. I owned Apple, I owned Google, Amazon, Facebook, Netflix I don't own, but Microsoft I own too. So I own all of these, and I figured let me take some profits on Facebook, let me get out of it, go into Raytheon. And that's important when you can look at your portfolio, analyze it, and really be honest with yourself and be like, okay, I'm too heavy in this, I need to get out of this a little bit, go into an industrial. And that's what I did, and I'm happy with that. And it's not that I'm not looking at tech anymore, because I'm still looking at Apple and Google when they drop. I mean, guys, you have to understand, Google owns YouTube. I'm a YouTuber, I guess, right? I make YouTube videos. Call me a YouTuber if you want. And they are ran by Google. So I figured I might as well invest some money in Google. I love it. It owns Google and YouTube, the two biggest search engines. I mean, guys, this is one of the better tech names. I mean, if I had a gun to my head, God forbid, and I had to pick a stock to invest in out of the big tech names, I might have to go with Google, honestly. Google or Amazon. It's one of those two. And then maybe Apple's there too, but I don't know. I just like Google a lot. I think it's so ingrained in people, Google and YouTube, that it's not going anywhere, at least for 10, 15 years, in my humble opinion. 20 plus years, nobody knows, technology changes, but Google is one that I'm for sure looking at. AbbVie and J&J healthcare plays, I love those for the dividend, and AbbVie has a very quick growing dividend. Last time I checked, the 5-year compounded annual growth rate is about a 20%. That is very quick growing there, and they've been paying their dividend. I forget how much. It's not too many years in a row, but they pay a 5% dividend. It's growing pretty quick, and there's room for more growth there. I'm loving AbbVie for the dividend. I've been buying this one for a while at this point, guys. I mean, I've been in this stock probably over a year, and Starbucks is another one, and Starbucks is great. If you guys remember on the channel during the whole drop, the crisis, whatever you want to call it, I was saying Starbucks, I'm buying into it at 75, 70, 78. I was buying all in that area. Now my average is $75, and we're at 105, and it's paying a nice dividend. And next time it drops, let's say it gets to 80, 90, that is where I'm willing to average up a bit, because again, long term, Starbucks is great. One of the best companies, best brand names out there, best brand names. It's insane. Starbucks, they could charge $6 for a latte. People are still going there, guys, and I think it's going nowhere. And J&J, I almost forgot. I mean, they pay a great dividend, very stable company. It's like a healthcare ETF. That's what people call it nowadays. They do a bunch of stuff with J&J, and now with the whole V-shot, they're benefiting from that as well. So those are some companies. I don't want to take too much of your time today, guys. We're about 12 minutes deep, but those are some of the main companies, about 7, 8, 9 companies that I'm watching during this next drop. If it gets worse, if it gets a lot bloodier, let's say 20% drop in the S&P, I will for sure be prioritizing these stocks, adding to them heavily, and building up my positions even more. So let me know your thoughts down below in the comments. What are you guys doing? Let me know. I'd love to know stocks you'd buy in the next drop. Hit that like button. Subscribe to the channel if you haven't done so already. And guys, I'm stumbling on my words here, but if you didn't know, we have a Discord chat. It's free. The Facebook group is also free, and you can get some free money. You can get 2 stocks from WeBull valued up to $1,600, and guess what? You could also get $30 from M1 Finance. Those are free. Link down below. And if you want to work with me closer throughout the day, you can get into that Patreon. Check out that link. We also do buy and sell alerts on there, real-time call-outs, and we do morning videos every single day and a bunch of other exclusive content. So check out the Patreon, also linked down below. I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Keep crushing the markets. Peace out.